Welcome to the Wednesday edition of Tech Stocks Daily, your go-to podcast for the biggest tech headlines. Today we've got a power-packed episode. Microsoft clinches a $22 million EU antitrust settlement. MongoDB battles a storm of class action lawsuits. Google spices up iPhone navigation with new speed features. And Apple's bullish jump towards becoming an advertising titan. Plus, drama unfolds as Apple and Meta clash, while analysts rave about iOS AI upgrades. Brew that coffee, sit back, and let's dive into today's whirlwind of tech. All right, tech enthusiasts, let's dive straight into today's star, Microsoft, as it juggles multiple headlines that are making waves across the tech landscape. First up, Microsoft has clinched a whopping $22 million deal to settle a cloud-related antitrust complaint in Europe. Cloud services organization CISP, which counts Amazon among its members, accused Microsoft of tilting the playing field with unfavorable licensing terms that allegedly stifled Europe's cloud ecosystem. With EU regulators breathing down its neck, Microsoft decided to go the amiable route and settle. The settlement not only spares Microsoft a hefty fine, but also paves the way for increased competition. In a gentleman's agreement, Microsoft even promised to roll out a new product allowing CSP members to run its software on their platforms at fair prices. And wait for it, Microsoft has also agreed to compensate these members for lost revenues over the past 2 years. Talk about settling with flair. Moving on, investor enthusiasm remains high around Microsoft stock, which, along with Apple, Meta, and Google, recently hit an all-time high in recent weeks. In a poll conducted by Benzinga, Microsoft marginally edged out Apple as the better buy, with reasons ranging from the company's formidable AI and cloud growth to its impressive long-term stock performance. Despite all the tech giants enjoying substantial growth, none surpassed a third of the poll votes, underscoring how evenly split investor confidence remains among these behemoths. If you thought the headlines stopped there, think again. Microsoft's AI ambitions are propelling it to new heights. Just wrapping up an impressive fiscal year, the company's revenue was projected to spike by 15% to $244 billion, driven significantly by AI. Surging Azure cloud revenue, bolstered notably by AI services, plus its AI Copilot being embraced by more than 60% of the Fortune 500, paints a very promising picture for the next 3 years. Analysts predict that if the trend continues, Microsoft's revenue could blast to nearly $371 billion within 3 years, pushing its market cap to the $4 trillion mark. Tech juggernaut much? But wait, there's more drama. In the regulatory realm, Microsoft decided to relinquish its observer seat on OpenAI's board amidst growing antitrust scrutiny. The company initially snagged this non-voting position after the dramatic reinstatement of Sam Altman as OpenAI's CEO. But with antitrust watchdogs in Europe, Britain, and the US throwing shade on the scale of Microsoft's influence, the software giant decided it's time to step down and focus on other ventures, citing that OpenAI's governance had substantially stabilized. Was it a genuine step back or a strategic deflection from regulatory radar? You decide. And good news for gamers, albeit at a higher price tag. Microsoft is giving Xbox Game Pass subscription plans a global price hike. The modification impacts Game Pass Ultimate, Core, and PC Game Pass plans. Alongside this, the Xbox Game Pass Standard plan is set to make its debut, albeit with some differences. No new games on launch day, but more games than Xbox Game Pass Core, plus online multiplayer. That's a whirlwind tour of Microsoft's news today. Buckle up, folks, because our tech universe keeps evolving, and with titans like Microsoft, there's never a dull moment. Hey tech enthusiasts, buckle up, because today's spotlight is shining brightly, and not in a good way, on MongoDB. Yes, folks, the beloved document-oriented database that promises to make developers' lives easier is in some legal hot water. So let's dig into what's cooking in the world of MongoDB and why it's making waves on Wall Street. MongoDB has been hit with multiple securities class action lawsuits, all converging around a similar theme. Allegations that the company and its top brass made false or misleading statements that misrepresented the company's financial health, particularly with respect to revenue projections and growth outlook. These lawsuits cover investors who bought MongoDB securities between August 31st, 2023 and May 30th, 2024, a period typically referred to as the class period. Now here's the meat of it. The allegations claim that MongoDB's new sales incentive structure, aimed at reducing enrollment frictions for its cloud platform, Atlas, backfired. Instead of boosting new customer signups and making it rain dollars, the restructure resulted in lower value enrollments and less immediate revenue from unused commitments. This whiplash effect caused concern among investors, leading to some serious stock price drops. On March 7th, 2024, MongoDB announced a near-zero revenue expectation from unused Atlas commitments for the fiscal year 2025, leading to a 7% drop in its stock price. It got even worse on May 30th, 2024, when the company slashed its fiscal year 2025 growth projections further, resulting in a whopping 24% fall in its stock price. Multiple law firms have jumped into the fray, eager to represent the aggrieved investors. From Robbins, Geller, Rudman and Dowd LLP to Bernstein Liebhardt LLP and even Holzer & Holzer LLC, there's no shortage of legal warriors ready to take up the mantle. The deadline to file for lead plaintiff in these class action lawsuits has been set for September 9th, 2024. A lead plaintiff is typically the one with the most significant financial stake and serves as the face of the litigation, guiding the course of the legal battle while representing all affected investors. And in case you're thinking, hey, I might have some paper losses on MongoDB stocks. Great news. Well, kinda. You have until the September deadline to throw your hat into the lead plaintiff ring. But remember, not fulfilling the role of lead plaintiff doesn't exclude you from potentially getting a slice of any settlement pie. Adding a cherry on top of this bitter sundae, analysts and market watchers also note that MongoDB has seen a stock price plunge of about 36.2% over the past 6 months, as of early July 2024. While MongoDB's Atlas platform and overall growth prospects show promise, particularly in the AI sphere and multi-cloud strategy, the current legal turbulence serves as a massive speed bump. So while MongoDB navigates through these choppy waters, filled with court dates, legal filings, and irate shareholders, the real question is, can they weather this storm and return to their high-growth trajectory? That, dear listeners, remains to be seen. Stay tuned for the next episode as we continue to decode the tech world's ups and downs with a sprinkle of humor and boatloads of enthusiasm. What's buzzing in the tech world today? It's none other than Google. We've got 3 major stories that highlight why Google dominated today's tech news headlines. Let's dive right into the Google goodness. First up, if you're navigating the world with an iPhone or CarPlay, rejoice. Google Maps is finally riding the speed wave. The popular app is rolling out a live speedometer and speed limit display feature for iOS devices and CarPlay. Yes, you heard that right. This feature, which has been available on Android since 2019, will show real-time speed data. Speedy drivers, watch out. If you exceed the local speed limit, the speedometer will change color to grab your attention. To enable this nifty tool, head to Google Maps, tap on your profile picture, select Settings, Navigation Driving Options, and toggle the speedometer on. This has been a decade in the making for iPhone users, and better late than never, right? Next, let's talk about your secret online life. Google is extending its Dark Web Report tool to all users with a free Google account. Previously limited to Google One subscribers, this cybersecurity feature will now be accessible to anyone, offering a window into the dark side of the web. Ever wondered if your personal data, like email addresses, passwords, and other sensitive info, has been leaked? Google's Dark Web Report allows you to create a monitoring profile and be notified when your data appears on the dark web. It's akin to having a personal watchdog protecting your digital identity. But remember, if your details, especially passwords, have been leaked, immediate action is your best defense. Change those passwords and maybe start using a password manager like Bitwarden to stay secure. Lastly, there's some high-stakes drama. Google parent Alphabet has decided not to follow through with plans to acquire HubSpot. HubSpot shares took a nosedive, plunging 12% upon this revelation. Alphabet was in talks with HubSpot earlier this year, but the discussions never reached a detailed stage. Regulatory scrutiny in the US and beyond also plays a significant role here, with large tech acquisitions being increasingly put under the microscope. Alphabet's withdrawal from the deal isn't entirely surprising, given recent regulatory pushbacks faced by other tech giants. HubSpot, known for its marketing automation software that aids small and medium-sized businesses, would have bolstered Google's business software and cloud infrastructure revenue. Despite the setback, Alphabet remains a heavyweight in the tech landscape, and its shares continue to soar, albeit amidst this hiccup. Phew. There you have it. Folks, Google Maps revving up with new features, your dark web detective, and some action-packed business drama. Stay tuned as Google continues to make waves. Apple was all over the news today like the seasoning on a well-cooked steak. Let me tell you why. First up, Apple analysts are gushing about the company's potential to become an advertising behemoth. Laura Martin from Needham really stole the show with her bold prediction. She raised her price target for Apple stock from $220 to $260, driven by her belief in Apple's untapped potential in the advertising arena. Imagine Apple slaying it like Amazon in the global ad market, which is set to hit a whopping $966 billion by 2024. That could just blow their current revenue of less than $400 billion out of the water. It's like turning Apple's existing empire into a cash-spewing machine without even raising the price of their uber-popular devices. Call it iMagic. But that's not all, folks. Apple is also cooking up some tasty AI enhancements for its iOS. How about ditching the old reliable and upgrading to an iPhone packed with Apple Intelligence, set to debut in iOS 18? Analysts are now nodding their heads in agreement about Apple's position in the AI race despite some initial doubts. Not even those declining iPhone sales can keep the stock down with such futuristic upgrades on the horizon. So, is it too late to buy Apple stock? Not a chance, according to the experts. They're expecting Apple's revenue to rise by 7% in fiscal 2025, and it looks like all those folks rocking their old crusty iPhones are finally ready to upgrade. Analysts predict that Apple's long-term innovation, combined with the AI upgrades, will not only expand its margins, but also drive up its earnings, potentially a good reason to stay bullish on AAPL. But hey, let's not forget the tech skirmish with Meta Platforms. Meta's CTO Andrew Bosworth made a cheeky comment about Apple's privacy stance, calling it less rigorous than Meta's. This followed a flap over Apple's refusal to integrate Meta's AI chatbot Llama into the iPhone. Oh, the tech world drama. It's like a Marvel versus DC showdown, but geekier and with more privacy policies involved. Still, credit where credit's due. Bosworth tipped his hat to Apple Vision Pro, saying it's helping consumers embrace new tech with less fear. So there you have it. Apple's news today is a spicy mix of bullish forecasts, advanced artificial intelligence, and tech drama that's juicier than the latest episode of your favorite guilty pleasure reality show. What's your take on Apple's ever-evolving strategy? Are you bullish on their advertising potential? Excited about the AI upgrades? Annoyed by their reluctance to buddy up with Meta? Drop your comments below and let's geek out together. All right, tech enthusiasts, let's zoom in on Microsoft and decide if it's a stock to buy, sell, or hold given today's news blitz. Brace yourselves because this one is packed with excitement and some high-stakes drama. Hold or buy? Why consider buying? 1. Settlement and competition. Microsoft settling the EU antitrust complaint with a $22 million deal and promising better terms for CISP members shows its commitment to playing fair and avoiding hefty fines. This can open the market to increased competition and fairer practices, potentially nurturing long-term growth and good rapport with regulators. 2. AI and cloud growth. The company is projected to see a 15% revenue jump to $244 billion this fiscal year, largely driven by AI and Azure. Analysts predict almost $371 billion in revenue within 3 years. That's hockey stick growth, folks. AI Copilot adoption by 60% of the Fortune 500 highlights deep integration and promising future revenue streams. 3. Stock performance. Microsoft, along with other tech giants, has hit an all-time high recently. Investor sentiment is strong, edging out even Apple in a Benzinga poll, making it a desirable pick among tech stocks. Why hold? 1. Regulatory scrutiny. The company voluntarily stepping down from its observer seat on OpenAI's board to alleviate antitrust concerns could signify underlying pressure from regulators. Decisive moves to satiate regulators can imply compliance, but they also hint at potential regulatory friction that investors should monitor. Number 2. Price hike in gaming. Xbox Game Pass subscription price hike could be a double-edged sword. While it could drive short-term revenue, there's always a concern about customer pushback. Gauge the market reaction to see if consumers are willing to shell out the extra bucks. 3. Market positioning. Despite its colossal standing, stay vigilant. As the stock is already at high levels, some investors might want to hold and observe the market reactions to these developments before making a move. If you're bullish on AI and cloud growth and believe Microsoft's market strategies and regulatory compliance moves pave the way for bigger wins, then buying Microsoft stock could be a solid choice. Conversely, if you're more conservative or wary of the regulatory landscape, holding on to your Microsoft stock until clearer trends emerge might be the way to go. Always make sure you do your own research and perhaps consult with a financial advisor to tailor your investment strategy to your personal risk tolerance and financial goals. Secure those gains or make informed decisions, folks. Happy investing. What a roller coaster ride in the tech world today. From Microsoft's strategic moves and legal settlements to MongoDB's legal quagmire, Google's fresh features, and Apple's bullish projections and spicy rivalry with Meta, it's clear the tech giants are keeping us on our toes. Remember to give this video a thumbs up, subscribe to the channel, and share it with your fellow tech enthusiasts. Join us again tomorrow for another action-packed tech news roundup.